Are you considering selling your home, but you're not sure you're making the right decision? Are you worried what you can and can't afford on your next purchase? Are you worried about selling your home and potentially making a bad decision of letting go of your home? If you've answered yes to any of those three questions, by the end of this video, you'll feel confident on whether or not you're making the right decision by selling your home. I'm Will Joseph, top producing agent, real estate investor, and strategist. I've sold and advised over 200 million in residential, multifamily, and commercial real estate in one of the most highly competitive real estate markets in the United States. If you're new to my channel, hit the subscribe button and notification bell to be notified every time I upload new content on the tips and tools that I have used for my clients to create literally millions of dollars in real estate wealth. If you're considering selling, it's probably for one of the following reasons. Maybe you're looking to buy a larger home or downsize. Maybe you're moving to a different area or state, or maybe you're looking to just take money off the table. Whatever the reason is, you need to always consider what is being done to your wealth in the process of selling. By the end of this video, you will learn the 3 steps that I take with all of my clients, from ultra high net worth to first-time home sellers, to help them determine what their equity is and whether or not selling is the right decision. Step number 1, determine your equity. This is far and away the most important step for you, the home seller, to take, which is to determine how much money you have within your home. What is your investment worth today? The first part of determining your equity is to determine the market value. In my prior video, 3 top tips to selling your home, I included a 4-part pricing strategy that I use for all of my clients to help them determine what the market value of the home is. I'll leave a link in the description below to the video where I discuss the 3 top selling tips, which includes the 4-part pricing strategy to help you determine the market value for your home. The next step is for you to determine ultimately what it would cost for you to sell your home. There are several components to selling your home, that all of which you can determine. As an agent, I use these tools to help my clients determine what they're left with following the sale. The next step and tool that I use with my clients is I go and I generate what's called an estimated closing statement. Some people call this a net sheet or a closing statement, but ultimately it's a prospective sheet that's generated by title or an escrow company or even an attorney that lays out all the costs associated with selling your home. In most cases, you, the seller, are going to be paying commissions, either to a listing agent or even a buyer's agent. You're going to have title costs. You may have attorney fees. You'll have escrow fees. A net sheet will tell you ultimately what those costs are based on the selling price of your home. So again, once you've determined the market value, in that net sheet will be all of the deductions on the cost to sell your home. It's critical that you understand what those costs are, because you don't want to get further down the line into your sale to determine it didn't make sense financially. So generating that statement is critical. We oftentimes tell our sellers that we need to generate 3 different scenarios: good, better, and best on price. So you have those scenarios going into what you make at 3 or 4 different price intervals. So again, you got to get that net sheet from either an escrow company, a title company, or an attorney. Next, we ask our clients to generate or to reach out to their lender. Lenders often will get a closing statement or a loan payoff statement that will let our clients know exactly how much of the loan they have left. Obviously, what the remaining balance of that loan minus the value of the property minus whatever cost to sell is in effect your loan, your equity rather. It's critical that you understand if there's also any lender payoff fees or penalties associated with that, in addition to what your loan balance. So reach out to your lender at the same time you're reaching out and getting that estimated closing statement to make sure that it's also the same number that escrow references on the net sheet. Third step in determining your equity. We always recommend that once you have final numbers from your lender, once you have a closing statement from your attorney or your or title or escrow company, that you take that information and you sit down with your CPA. It's important that you understand as a seller the state, local, and federal tax implications of your gain, and that your CPA understands what the costs are associated with your equity. It's critical that you, the seller, understand clearly what the costs are associated with that home, and also how that impacts either your gain or loss in the property. You may be eligible for some tax exemptions. You may be eligible for some tax deductions. Whatever the reason is, you need to understand the implications to state, local, and federal taxes as a result of selling your home. Because ultimately, following the sale of that home, the payout of those taxes will result in whatever equity you plan to put aside into another investment or another home. If you're doing a 1031 exchange, you've had an income property and you want to roll this into another property, we always require that our clients sit down and discuss with a 1031 exchange intermediary how much they can roll over. What are the costs associated with that exchange, and what are the rules around identifying and exchanging? So it's very critical that you understand all of the costs associated with that transaction of selling. Step number 2, determine whether you can afford your next purchase or investment. This is a critical step for you to take as a seller before you decide to sell your home or list it. This is the step that will help you determine whether or not your plan to sell and buy makes sense. It's also a step that I recommend all of my sellers take so that they have a clear understanding of not only what they're left with, but whether or not that equity following the sale of their home translates into another purchase. As an agent, I never want my sellers to just sell a home without understanding what is the broad plan. Where are they going to go? What are they going to buy? Is the new purchase better than the current purchase? Does it make sense for them to hold off and maybe rent? Does it make sense to not sell? Understanding the ability to purchase another investment or home is critical to an end-to-end solution. It's something that you, the seller, need to take and understand prior to selling your home. And the last thing that you want to end up is to get halfway through your listing process just to determine, oh gosh, I can't afford another home, or the next investment doesn't pencil. So how do you determine this? As an agent, with all of my clients, from high net worth to first-time home sellers to multifamily property sales, we generate another escrow net sheet. We use another closing statement so that they understand on the purchase, what are the costs associated with that? What is the escrow cost? What are the other fees associated? Sometimes people have to use some agents. Nevertheless, you need to understand or have escrow, title, or an attorney generate a new sheet for you so you understand the costs associated with your purchase. In some states, if you're moving from a different area, from one part of a state to a different part of the state, they have different rules for what buyers and sellers pay for. So it's critical that you run another seller net sheet, and especially if you're leaving the state, you need to understand how that's done. In some states and in some regions, oftentimes buyers have to pay the buyer's agent. So you need to understand that as well if you're going to sell out of one area into another and the real estate rules change. Next, we have our clients, if they're using debt, talk to their lenders. It's critical that a seller talks to the lender and gets a firm understanding in terms of what happens to lendability, especially following the payoff of a loan. It's critical that you understand your credit and understand whether or not you are lendable into the new purchase or property. If you're selling a 1031 exchange apartment building, it's also critical for you to determine if you have to carry the debt over, that you can still qualify for that debt. Missing out on that loan could prevent the sale of that property, thereby costing you a significant amount of tax gains. So in this step, talk to your lender, talk to multiple lenders. If you're changing states and moving from one state to another, it's also critical that you find potentially a local lender that will help you understand how your rate transitions. Sometimes if you're relocating, you might not qualify for the same loan. If you're buying a second home in another state, you may not, certain lenders may require more down. This is also, again, super critical for you to understand, because if you're selling, you need to understand your equity and how that translates into new rules in other areas. Last part of determining whether you can and can't afford your equity is, again, I'm going to say this over and over again, talk to your accountant. You need to understand whether or not the next purchase, and what the deductions are, what the interest deductions are, what the property taxes are for the new purchase. So while you're sitting down with your lender talking over what your equity is, you need to understand what the new accounting scenario is and what those deductions are for you. If you're moving to a different area or a different state, I highly recommend that you meet with a local accountant, someone who's proficient in the local accounting laws, as well as local property tax and state laws surrounding how those assessments are done. Once you understand what it costs to purchase the home, once you understand your lendability and the ability to acquire debt on your new purchase, and 3, once you have a good accounting snapshot of what your new purchase will look like, you should have a pretty good sense of whether or not your purchase or new investment is viable. Step number 3, know your market. It's critical that you understand and know what happens to your property values within a calendar year. It's every market within the United States experiences certain market drivers unique to that area, as well as different effects of seasonality. You need to understand what happens to prices within a calendar year. In my prior video, Top 3 Tips to Selling Your Home, I included that 4-part pricing strategy. That same strategy could be used to help determine what happens to property values between January and December. So as you're considering whether or not to sell your home, you also need to determine when to sell your home. In step 1, we determined how much equity you have left. Step number 2, you've determined not your viability of buying your next property, but in step number 3, you need to determine your timing strategy. And so as you're looking at the viability, you need to make sure that the time component is actually realistic for you. Now, when we look at time is also important not only in the sale of your property, but also the timing on your next purchase or investment. If you're looking to sell your home and purchase another, you need to understand the dynamics of the market you're buying into. Now, if you're buying into the same market, it shouldn't be as much of a concern, because you'll ultimately understand the inventory and pricing through the sale of your own home. But if you're moving out of area or moving to a different state, you need to work with an experienced person if you do not understand that market. An experienced agent will help you determine what's happening with pricing, what are those market drivers that you may not see on Zillow and that you may not see in the news. They'll tell you what's happening with pricing, what new properties are coming to market, what the good areas are, what the areas are to avoid. So as you're looking in terms of timing, a good solid local agent will help determine whether or not the timing of the sale on your property matches up with the purchase on your next property or investment. Also, a solid agent in the new market will help you find potentially an interim living situation so that you don't feel pressured necessarily just to go from a sale to a purchase. Maybe sitting out and renting your home for 3 to 6 months might be the best solution. In any case, a good agent will be able to come up with a solid relocation strategy. This is a lot of money. Whether you're selling a multi-million-dollar property or your first home, it could be the majority of your wealth, if not all of your wealth. So you should treat the sale of this property with the same gloves you would any other investment, and follow these 3 tips. And just to summarize them again, first, determine your equity. You need to understand the costs associated with selling your home at different price points so that you're prepared and you know what offer to take and what you're left with. Step number 2, if you are looking to buy another property or investment, you need to determine the viability of that investment or your ability to buy that property. You don't want to end up in a situation where you sell out of a property and you're not able to execute on the next step of your strategy. So determining viability is critical. And then thirdly, you want to determine timing. You need to know your market. Once you know your market, it will give you the time component and help you determine when to sell and align the purchase of your next property with the sale of your current property. I'm Will Joseph. Thank you for watching. If you enjoyed this video, don't forget to hit the thumbs up button and leave a comment below if you're thinking about selling your home. I'll see you next time.